The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. As always, we like to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
So what do we have today? Well, we're up 9 points. Certainly we had some decent volume yesterday. Much lighter today, 4.2 billion shares. And we were, I don't know, 300 to 400 million short at noon. So lighter day, going to have about 6.5 billion shares, something like that, compared to yesterday's, 8 billion shares. So it's going to be a light day up. Of course, we had a bunch of earnings. It kind of flattened out a lot, probably really looking toward Intel after the bell tomorrow night. A couple of earnings tomorrow morning, but we'll look at some of the earnings today. But there's just not a lot going on. Not a lot of catalysts to drive market prices higher. And again, a lot of these stocks, people just way too short. We have the first kind of warning signs in Tesla, although we don't have any signals to short it. But I've always said that the thing you really want to watch out for in a stock like Tesla or iOmega or any of the other super culty stocks is when everybody quits shorting it. Apple has come down a little bit, but they're still shorting it. Tesla had the very, very biggest drop of any of them. It's up a bit more today. And again, that'll fall down to just about nothing, and then the stock will probably come back $100 or so or more. So the question is whether or not you could even think about buying a put on it without getting the timing almost perfect. And you're probably not going to get the timing perfect, but I think you'll have a good lead on there, and that is when they quit really shorting, give it about 3 days and see if you don't see a signal. But generally fairly good. Anyway, a lighter volume, but not light volume or vapor volume. It's okay. Earnings really not moving that far that fast. We'll look at some of those. So it's kind of a hurry up and wait. But, we've got kind of a real diminishing returns. So I could say, unless you pick the wrong stock, you might be able to get a little bit of after-hours trading in on the disappointments. But we'll talk about Netflix and their earnings in a few minutes. A few other things going on. Let's do a little bit of history, and then we'll get into the rest.
And it's all just a little bit of history repeating.
Well, I got the date wrong because I guess I didn't think about changing it. Should be 1998. There it is. On this day, Microsoft reached an agreement in the U.S. Department of Justice regarding Internet Explorer on Windows 95, and the agreement computer manufacturers would or could have the IE link removed. This is a small step in the antitrust suit against Microsoft using bundled software to drive out competition. This all really started in 1992 when we had a new president. It wasn't so much the president. It was the people that he brought along from Chicago. Of course, Chicago known for massive corruptions. But fairly soon after getting into power, a lot of these guys started knocking on the door of Microsoft and Bill Gates. Bill Gates could care less about politics at the time, and told them to go away. They wanted money. They wanted money for their campaign. They needed money, they said. So time went along, not much happened. Bill Gates just ignored them, kept on making the company go a little higher. Well, 1996 comes around for the second election. They're not much in the way of taking no for an answer. They started sicking everybody they could in the Justice Department on Microsoft. Many companies in the tech sector were as guilty as Microsoft. They did the expedient thing, though, and paid off the criminals that came from Chicago. Bill Gates, of course, continued to ignore it until early in 1998, they had the Justice Department coming after them for the Internet Explorer being hard to remove and nobody being able to compete with them. Of course, there was a company called Netscape trying to compete with them, but by the time this had happened, they were pretty much over and out. Mark Andreessen, who ran Netscape, of course, ended up cashing out early, and that was the smart thing to do, and building a lot of other companies with his experience in Netscape. But this was just the beginning of it. Bill Gates still didn't get the message. Come around 2000, I don't know, the first quote, more and more lawsuits were pushed against them. Doesn't mean that Microsoft wasn't guilty. Just means that the only reason they ended up in court was they weren't paying off the right folks. And you know what? A lot of people come to Washington, D.C. with a variety of issues. But one thing we know now is that where they live in the northern county of Virginia is the richest zip code in all of America. Their business is the government, and their business is taking money from taxpayers and funneling it to anywhere that you want as quickly as they can. On this day in 1998, Fairfax. What else is going on here? We've got about a minute here. Wanted to start talking about Tesla, so we'll start that, even though we'll have to carry it on after the break. But again, another nice pop. What you generally want to do is watch those short sale numbers. Now, you got a gap here. You never got a signal to pull the trigger. Never got what I like, which is the best signal out there, which is the double repo pattern. That's 10, 15, maybe even as many 20 days above a 3x3 displaced moving average or a 9-day moving average. A couple days below it, a couple days back above it. You got 1 day below it back on the 31st of December, and it popped right back up. You generally want 2 or 3 or 4, and it has more of a pattern. This looks like you could get one, but it's probably going to be more like $600 or so. Got to $594.50 today. But volume's okay. Is it ever going to live up to this price point? No. It'll maybe be a year, 2 years, 5 years, or 10 years. But it'll eventually come back, as all these stocks do. We'll be back in just a minute. We'll talk a little bit more about Tesla, Boeing, and some of the movers from earnings.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
And as we're back here, we're talking about Tesla here. Again, no signal yet. It will probably be fairly succinct when we get it. But normally when you get up here, you want to always wait about 3 days before you start really looking for stuff. Could it gap down tomorrow? It could, but you know, if you've had gaps in this stock before. The target for this stock over time, not instantly, would probably be something around $270 for when this does fail. So I don't know if it's going to be a bad earnings call or we're going to find out that someone was indicted around Tesla. The books have always been highly sketchy, but you never really know. Anyway, that's going to be the one that everybody is looking at, and that means the longer they're looking at it, the more likely it is that stock discontinues either higher or sideways until the shorts give up on it. But some signs that maybe they are. Boeing did finish filling the rest of the gap with the candle today, got down to 302.72. I have some emails asking whether or not you think the ability to keep the market up by gradually moving up from this level. I don't think it's going to gradually move up. I think you're just going to get the news. The news from yesterday is from one congressional staffer who said something that Boeing did not say, which is that they're not going to get approval till midsummer. Boeing doesn't know when they're going to get the approval. It could be earlier. I thought maybe Boeing would be sandbagging, but at this point, it just looks like most of this is coming out of a congressional staffer's office that is around the FAA or oversight ability, and it's not. I'm not sure that any of that is actually true. And of course, I don't think anybody has the ability to know. But from one thing another, from Friday, days before that, it's certainly in the interest, apparently, of several people in the media to go after Boeing at this point. And I'm not exactly sure why. Could be political, could be that maybe someone's short this thing and they want to get out of it. The best thing to do is to always throw as much news, bad news, at a subject so you can cover your shorts. I remember one of the best parts of reminiscence of a stock operator with Jesse Livermore was him selling a bunch of wheat when he was long corn or something. And of course, everybody saw the one moving and figured the other one would too. So he was able to get out of a position that probably would have bankrupted him. There's a lot of things that go in the short term that don't make a lot of sense in the long term. So I was talking to one of my subscribers today. People don't talk about that the biggest failure of a air manufacturer was just last year. And they don't bring it up a lot because, of course, it's state-sponsored, and that is Airbus. And their A380 sold a handful of units. And, of course, they kept on running into everything at airports because it was so large. But also, it was much better to have a bunch of smaller planes, not small, but smaller planes, than to have one big plane with 650 people piling off of it at one time. No matter what they did, it was better to have two planes flying 2 hours apart than one plane flying all together. The efficiency wasn't what Airbus promised. But when you talk about the cost of actually designing one of these planes, and that from the day that they really get the design down to about 7 years later when the first plane rolls off the assembly line, we're talking $10-20 billion worth of investment to get a plane started, much less the cost of actually building those planes. And of course, a lot of those components are made by other manufacturers. So this is one of these all or nothing. But I think I go back to the question of, do these people bet the farm? I think that was the question. And it is literally, when you're talking about the expense of building these kind of massive systems, we're talking about 1.5 million parts go into an aircraft like a 737. 1.5 million parts. Of that, 1 million of those parts are not made by Boeing. Boeing mostly assembles a lot of the parts. They do have some manufacturing techniques they keep in-house as a way of keeping other people out and not letting other people in, like Airbus, if they have some kind of special secret sauce like McDonald's. I don't know how secret their sauce is if it's always available. Seems to me like James Bond always running around saying he's James Bond. You don't think he'd ever use another name? He never really, it's always the same name. I never understood that. I think a spy would be a little bit better at hiding his identity, but you never know. I guess the thing to do is be a spy, but I guess you're not a spy if everybody knows you're a spy. Don't know. Anyway, the Boeing company certainly has somebody out of it. Most of this is coming from the oversight out of the House in the FAA from somebody in there. But again, single source, is there any truth to it? I don't know. Now, Boeing did pop a bit off the lows when the news started coming out today that they actually said, and that is that they will not be pulling or diminishing or delaying any of the dividends from Boeing. But again, market's kind of weak already. It's not one of these things where I'm going to be pulling or going after any or bottom fishing on any of these stocks. We've had quite the run. And anytime you start seeing stocks like Tesla start acting like 1999 again, I always get extremely worried. But Tesla in itself is fairly interesting. Now, there's a bigger problem that I think Boeing has, and it relates to all the travel companies too, and that is, of course, the swine flu part 2, which is actually gaining a lot of momentum, and we see that in the news coming out after noon today. So that it's going, any kind of travel stuff is going to hurt airline companies and airline manufacturers. But of course, I'm waiting for the big move, and that will be, my guess is, if you could catch it right and this continues, I think you could see many of the ship operators, the cruise lines, fall in half. If this thing continues and gets a little bit of more legs under it for what's going on. They're bad enough. They might as well be a big petri dish floating out there on the ocean. But if this thing gets a little worse, it's going to get incredibly bad for those people locked in cabins out at sea. We'll be back in a minute.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And as we're back, you can always give me a call at 877-927-6648. You can email me at path@tfnn.com, and of course, you can always put a message in the den. Okay, we got that one. Okay, so we got a couple more to answer. First is LX. When can I buy it? Well, you certainly broke out. Find out a little bit more about this. Lexan FinTech Holdings. Well, it's an ADR, so that makes it tough because you always have the issues with that. Well, certainly you wanted to buy around 14 and a half, $15. You're at 16.93. Question is whether or not you get a pullback in this one, but don't know a lot about it. Let's look at the profile here and see what these guys have to say for themselves. Operates as online consumer finance platform for young adults in the People's Republic of China. Well, there's many reasons I don't want to have anything to do with this. One, it's a Chinese company. Two, it's dubious bookkeeping records over in China. It'd be a pass for me. I wouldn't buy it. Could you make money on it? Probably could. Question is what happens when everything goes south in China. And, of course, they're already quarantining a whole province over there. So I just don't see a lot of reasons to jump on that particular grenade today. It's not a hill I want to die on. We'll have to come up with some other things. Of course, Netflix after the bell last night, down a little bit today. What is it? Down 3%. Not the end of the world. But the numbers, although everybody talked them up yesterday, were not particularly good. They were good in what they reported, but the way that they look at views has changed, and that caused some confusion when the early one-liners came out. They used to say that you had to watch so much of a movie to count it as being watched, i.e. the entire thing. So if we were talking about the Irishman, did you watch the whole 3 hours? Was an hour and a half to make enough? I never really got into exactly what they do, other than it may now be if you watch 5 minutes of a movie, it counts as you watching a movie. So they're going to count for a lot more views. I don't know how many things I've watched on something like that or Amazon. 5 minutes in, you know it's no good, and you go on. So does it actually count? They're trying to push other things like, what is it, The Witcher? Yeah, I watched about 5 minutes of that. Didn't look any good at all. Maybe other people are really into it. You basically came up and tagged and finished putting kind of the touches on this gap. I think it's going to be a long time before these things get it. As we said in previous earnings calls, Netflix has a very specific niche. Unfortunately, one of the things that you want to be able to do is make sure that people do not have an easy way to get in the same business you do. Disney's already in it. We've got the Peacock network coming on. The problem is that we're going to have the bulk, B-A-L-K, balkanization of stuff. And depending on what you have, you'll be able to talk around the water cooler to other people about. But certainly the day of watching Jerry Seinfeld and talking about the episode at the water cooler the next day is kind of gone. Most of the shows on broadcast television aren't that good, mostly because the best talent, the best writers get a little extra money by going to Amazon, Disney, or Netflix. So broadcast TV's standards weren't all that high to begin with, but they're probably dropping even now. So we'll have a lot more to look forward to in The Bachelor and all these other reality show. I call them unreality shows because they literally have nothing to do with reality. It's all about how you edit it to make somebody look good or bad, drive a narrative, and of course get rid of the people early on that you don't particularly like if you're a producer. But what can you say? I do have to say that probably on the bright side for these companies is even the playoff games from the NFL had low viewership. This is, even though the NFL is trying to spin it, this has not been a rather good season for the NFL, as more and more people pick their own time to watch something. Somebody asked me the other day about whether or not these guys are going to have to carry live TV shows. And I guess eventually they will. But for the most part, the young set, the under 30 crowd, hasn't grown up spending a lot of time watching sports. That is generally the over 30 crowd. And if it's not basketball, baseball, or football, and you're under 30, you're probably not watching it. And the chances of you starting to watch it are getting thinner and thinner. So I think most of the things that drive people to watch live television, news, and other things that have been the bastion of broadcast TV just don't have a lot of legs to stand on going forward. Now, that doesn't mean Netflix is going to the moon. They have their own specific problems, which is paying for all this content and not being able to monetize it. Over the last few quarters, and maybe even a year, they've worked very hard to go after a lot of, what am I trying to think of foreign language films. But none of those have paid back very well. We're going to go to John in Philadelphia. How you doing, John?
David, I'm doing very good. David, I wanted to ask a very specific question. During your upcoming break, could you look at three cruise line companies, CCL, RCL, and NCLH? That's Carnival Cruise, Royal Cruise, and Norwegian. And I'm wondering, when you look at those three charts, using your patented shorting volume indicators and your you've got that other indicator, I'm wondering if you can identify which of the three looks like it internally is the weakest of the bunch. The patterns are virtually identical, by the way.
Yeah, we looked at these a little bit yesterday, but sure, certainly we will take a look at them when we come back. You want to hang on?
Thanks so much.
Okay.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com. educating investors.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And we may have John still on the line. Are you still there?
I am, David.
Okay. The ones you had out here were, was it Norwegian, Royal Caribbean?
Yes, that is, and that's the one I don't know. Norwegian, Royal, and Carnival.
Okay, I was just wondering about the ticker to make sure I had it right. Here's the one thing that I would say first of all, especially if you've got diminishing folks coming on, and that is that Carnival has 4 new ships falling into the water this year. They'll probably be the worst hit on any kind of slowdown because these are basically replacing ships that maybe held 3,500 people and now be able to hold 5,000. So, you've got a lot of supply coming on, which I've been looking at this for a while. The question is whether or not, the floating Golden Corral, which is what the Caribbean cruises are like. The other ones are a little bit more upscale. But I would suspect that Royal Caribbean, Carnival, those people kind of the lower end of the cruising spectrum or lower dollar, probably going to be the ones also that didn't buy the insurance. I imagine the more upscale one bought the insurance. So they may continue and go. The other ones, the insurance, whatever it is, $30, $50 seems pretty cheap compared to a horrible vacation that you may be forced to go on. So anyway, first of all, Norwegian probably the best of the breed and the way that they're run. RCL, the second one, which is Royal Caribbean Cruises. Both of those are kind of at the top. Carnival, not at the top. And I think that's exactly the reason why, those 4 ships. I talk from time to time about patterns that I like, and probably the best one for topping certainly is Joe DiNapoli's double repo pattern. You've got a double repo pattern showing up in the CCL today, and you also have one, is it in Royal Caribbean? It went through yesterday. Then we'll go through these patterns just a second. And then do you have, it's less pronounced. Norwegian's the best of the breed. The other two look like they'd be taking it on the chin. I think Carnival, with all the ships coming on and all that additional overhead, may be the worst of the bunch. But not bad. Anyway, for a Joe DiNapoli double repo pattern, what you're really looking for is a trend higher with 10 to 15, maybe 20 days above a 3-day displaced moving average or a 9-day. In fact, we'll look at this in a 9-day too. This is where the 9-day is a little smoother than the 3x3, but both of them have it. All you really need is a little close lower in Carnival to put that together. And what else did we have? RCL. Now this one's kind of a blow off top, but it did the same thing. But this one actually went higher for longer. You can make a case that this one had 25 days above the 9-day, closed a few days underneath it, went sideways for about 7 days. Yesterday went below it. Today you've got it, but supports at about 128. So it's going to take a little bit to break that. I'd still say the dog is Carnival Corp. It'd be my pick as the weak sister in the bunch. And like I said, depending on whether you use the 9-day moving average or you go here and look at the displaced moving average. On the displaced moving average, you're getting the signal to pull it today, but you don't have much in the way of volume so far. But I think that one
of interest is I'm looking at your charts with your power law vector indicator and that chart pattern and that Royal Caribbean RCL has got in place a perfect double high. We don't know if it's a top or anything yet, up at that 135 level versus January of, well, actually 24 months ago. And I just, lurking in the back of my mind was the action of these names back there, what was it, October of 2014 when there was that Ebola scare. So there was a nice brief trade, well, it wasn't tradable because I didn't see that coming, but you had that phenomena. So thanks very much on reviewing those three, David. I appreciate that.
Yep. Well, I don't know what'll happen, but I do think that Carnival probably looks the weakest. It has the worst pattern already. If you just looked at it without the volumes or anything, it hadn't made it back up to the tops. And it tends to be heavily over-leveraged financially in the past. So, on that one, I think you could easily see 39.46 come back there if the whole issues with the SARS continues on. So good luck.
Thanks, David.
You bet. Okay. Other stocks of interest out here today, the big movers, PCG. This looks like it could come back to about $10, down a little bit today. MOX, which is, what is that? I probably typed it in wrong. CF Industries, this one's blowing through the gap up on, what is that, last June 13th. That had 3.2 million shares. You already have that and more. There's yet another gap at about $42. These guys are pretty sure transportation, right? Nitrogen fertilizers and other nitrogen products worldwide. Principal nitrogen. I see their trucks. So I thought they had a truck line. Fertilizer products include ammonia, granular urea, everything you need for a truck bomb, apparently. CF hasn't. So anyway, this looks like $38.68 back from the May 31st, 2019 low. Certainly could get re-challenged here fairly quickly. Okay, what else do we have on my list of stuff? Okay. Let's go back in here to the S&P. I'll go back into this. Okay. Okay, what else do we have? Yum brand. Well, that's not so bad. Oh, go on a break. We'll be back in a minute. Got a few things to handle before the end of the day.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And I had a question if anything's happening here in Amazon. Of course, Mr. Bezos is out trying to tell everybody after this is now the 4th story of who got his text to his girlfriend while he was still married. Now he's blaming the sauce. First he blamed the brother of the girlfriend. He ended up cashing in, I think. I don't know if he made a lot of money, but cashed in because, of course, apparently that wasn't true, at least what I heard. I know nothing. I only speculate in what I read. But kind of interesting to see that he's trying to get the people to all beat up on the Saudis these days. But I don't think that there's – I mean, he didn't know then. He probably didn't know now. Doesn't really matter. Again, like a lot of these stocks out here, we've got some nice setups for some potential double repo patterns. It doesn't mean you pull the trigger yet. You'd have to have a abiding belief of lower, but these patterns do look fairly good out here. What you need, though, is the close below either the 9-day or the 3x3 displaced moving average. All of these look rather ripe. And, of course, we're fairly high. I would probably go after some lower hanging fruit than Amazon, but probably a good signal out here that these things are hanging out at these highs. They don't need much of a down move out here to get going. And who knows if it's this flu thing or it's something else coming out of left field that no one's thought of. But a lot of times these big slap in the faces to the market get people who don't have a healthy respect or any fear of the markets anymore. Probably need a little bit of fear to go higher. We'll be back tomorrow. Same bat channel, same bat time. Remember to sell when you can, not when you have to.